What if I told you there is a hidden formula for Wall Street insiders used to protect their capital and grow their profits while most retail traders lose money without even realizing why? This simple yet powerful rule, known as the 357 rule, can completely change the way you trade and invest in the stock market. If you ever felt frustrated by losses or sudden reversals, stay with me till the end because this could be the moment that transforms your trading mindset forever. The 357 rule is not some secret algorithm or complicated indicator, it is a system of discipline. It's about managing risk, maximizing reward, and protecting your portfolio like a professional investor. Let's decode it right now. 3 stands for risk. You never risk more than 3% of your total capital on a single trade. If you if your account is $10,000, your maximum risk per trade is 300. This simple boundary keeps your losses under control even when the market turns against you. 5 stands for total exposure. You should never have more than 5% of your total capital exposed across all active trades. That means if one or two trades go wrong, your entire account doesn't collapse. This rule keeps you in the game long enough to win the bigger battles. 7 stands for your reward target. Every trade you take should aim for at least a 7% profit or a reward that's twice your risk. That's how professional traders stay consistently profitable. Even if you lose 2 trades and win one, your math still works in your favor. Let's take an example. Suppose you risk $300 on a trade with a target profit of 700. If you lose the first 2 trades and win the third, you still gained $100. Overall, that's the beauty of calculated risk and disciplined reward. Most traders lose not because they pick bad stocks but because they fail to control risk. They trade emotionally, over leverage positions, and panic when prices drop. The 357 rule removes emotions from the equation. It gives you trading structure, balance, and confidence. This strategy works whether you are trading Tesla, Apple, Nvidia, or ETFs. It's timeless because it's built on principles, not predictions. When you follow the 357 rule, every trade has purpose, every loss has a limit, and every profit has direction. Remember this: 3% risk, 5% total exposure, 7% target reward. That's the framework that protects capital, compound profits, and builds long term financial freedom. If this made sense to you, hit that like button, share it with your trading friends, and subscribe for more strategies built for serious investors in the US market.